This is the 2050 strategy that I use quite often. Pretty simple trading strategy. This is based upon the market moving in 50 pip increments. It's a shorter term trading strategy. This is pound Canadian dollar. The first thing I would say is you need a discernible trend. So when you go out to the daily chart, clearly the trend is down. So you need a market like this. You don't just do it willy-nilly in whatever market. In front of you, I have the 30-minute chart. It also works on the 15-minute chart, possibly even the hourly chart. Really comes up to down to your preference, but 30 minutes seems to be about the sweet spot. So the idea behind this, and this is very simple, you trade in the direction of the trend, as you always should. Counter trend trades are dangerous. And in this case, we know that it's down. So with that, I would plot lines at every 50 pips. In this case, I'm going to go ahead and start at 162. And you see 161 and a half, 161, 160 and a half, 160, and so on. So we know, again, that the trend is down. And what we look for is areas where we break a 50 pip line. Now, I would also point out that this could be done on higher time frames with just use 100 and adjust your stops accordingly. And what I do is I wait for the move to break down below one of these vital 50 pip numbers. And then I put a 20 pip stop. So I'm short here once we're broke down. And my stop loss would be at 162.20. And I would simply target the next 50 pip line, in this case 161.50. Now, somebody who wants to hang on to the trade could just put their stop loss, and this is perfectly valid, 161.70. Aim for here, move your stop here, and then you get stopped out. Now, that's basic round figure trading. But by doing this, this allows me to get in and out of the trades quickly. And more importantly, I am risking 20-ish pips. It might be 25 on the 30 tops, because you're going to break down. You're not going to take a market that has stretched this far and then put a stop somewhere in that candle. You do have to use a little bit of common sense. But on the normal breakdown below this, I would be risking 20 pips. I would be aiming for 50, and that automatically has a 1 to 2.5 risk to reward ratio. Knowing the trends tend to go for 2 to 3 years in the Forex markets, these systems will work. That doesn't mean every single trade will work. But using proper money management, perhaps 1%, 2% of your account, and aiming for a 2.5 return every time you trade on a high probability setup such as this will bring in the profits. There will come a time when they don't work out. There are also some caveats I would add to this. So, for example, if you're looking down here, you can see that 160 wasn't hit. We got within a couple of pips. Well, at this point, is there any reason to take a loss? I don't see that at all. So, another argument that can be made is once you're halfway through the box here, if you will, you move your stops to break even. So you might get stopped out, but then again, you're not going to lose any money. There's a lot of different tweaks to the 2050 system. And, on the higher time frames, it might be more like 3300. But nonetheless, I do like this way of trading, but you must, and I cannot stress this enough, trade with the trend.